Hello everyone, I'm Dr. Stock, and in this video we're taking a look at market performance today and also market catalysts that we have coming up throughout the rest of the week. And I think that there's two major events that we need to be watching for, and I want to give commentary on those things in this video. So before I get there, do yourself a favor, find this link for Moomoo down in the description. Click the link, sign up, deposit your cash. You get up to 17 free stocks by using my link that's available through this. You're supporting yourself while supporting the channel. By depositing $100 or more, you get 5 free stocks valued up to $2,000 a piece plus 2 AI draws. By depositing $1,000 or more, you get 15 free stocks valued up to $2,000 a piece plus the 2 AI draws. One other thing, while you're looking down in the description, find that link for the Patreon. Click sign up, get access to my Patreon exclusive content, as well as access to my private Discord where you can interact with me and my Discord members throughout the trading week. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. All right, so check it out. Here we are looking at the SPY, and you can see it's really been sort of narrowing in on itself. A lot of sideways movement going all the way back from November. We had quite a run from December up through February 2nd, I believe it was, Groundhog's Day itself, and then sort of been tapering off. A lot of up and down going, a lot of volatility with that. And then more recently, we kind of got stuck in between the 50-day and the 200-day, going all the way back to March the 17th. So that would be St. Paddy's Day, and call it the luck of the Irish that we were able to find support right at the 200-day simple moving average that we have here. And up here is the 50-day simple moving average. And you can see we were able to peekaboo up above it on March the 22nd before coming back down. We actually opened there. We closed all the way down here, so somewhere in limbo between the moving averages. And then over here, we had a low price on the 24th to close last week, and that was at the 200-day. And then we also peaked up here at the 50-day. So we're kind of stuck right now in the SPY, and I think it's really going to take those two market catalysts that I was talking about. And those market catalysts, one of which is GDP, which gets reported to us at 8:30 a.m. on Thursday. We get the third estimate for GDP for Q4 2022, so that would be at the end of last year, and we're looking to see if we get any sort of revision up, down, or if we're going to hold the same, and I'll show those to you as soon as we take a look at the Qs real fast. So I think in the meantime, we can hold on to support and resistance in between the moving averages. If we get good numbers, we can solidly break up above there. We can possibly break again above 4,000 and catch on to that 1%, maybe above that, about 404. Well, I said 4,000. 4,000 is for the S&P, 400 for the SPY that we're looking at right here. So crossing the 400 line up to about 404, I think we got room for that for good news. And if we get not so great news, I think we have room down to the 389. It's about 1.5% down from where we're at right now. So I guess that makes about 2% up for 1.5% down. And I could see that as being the range that we get from that catalyst coming up on Thursday. So let's take a look at the Qs. Q. There we go. All right. So the NASDAQ has been having a bit better of a run than the S&P has recently, and you can see the sort of takeoff that it's made since the Golden Cross moment, and since then we've sort of been rounding off from there and tapering off a little bit. Not very able to break support very easily though. Still hanging in there, and then this candle here, you can see that we opened up just a little bit higher. It looks like, let me see where the open is, 308, and we closed at 307 today, and that's 0.53% down from the previous day. So not the worst week ever that we have. It's a little bit a market with no real news to move it. So we have the banking sector stuff sort of clearing up a little bit, making it sound as a little bit more isolated. However, we have still that possible credit crunch. We have commercial mortgage-backed securities to worry about, with a lot of those maturing. I think 400 billion of them maturing this year, and then throughout the next 5 years, I think it's like 2.4 trillion in that. With higher lending rates than they used to be. So that's something definitely to watch out for. And we might just come back and retest this 50-day simple moving average in the near term. So that is all the way down at about 297 right now from 3. Oh, wow, that's 3% if we get there. Honestly, maybe it's more like 300, I think would be more reasonable. So a little over 2% down could be room if GDP doesn't serve us well on Thursday. And if we make an upward travel from there, still peaking at about 313, so about $6 up. So for what I have here for the Qs, for QQQ, about 2% to the upside. Maybe we do peekaboo up, back up as high as this 315 that we had before, and it would be nice to have a big volume day with that finally broken if we're bullish on the markets, because that would, oh my gosh, There we go. Let me reset that. There we go. Coming back and retesting this high would be absolutely incredible. If we don't break through this high right now, we still are in that possible double top formation that we have. And if we do trail down to the 200 day, that could be really dangerous for us seeing further lows, further fall from here. And I think it would take significant news to move that. Maybe Q1 earnings will be those things as I expected. Maybe forward guidance isn't as bad. Maybe earnings won't be as bad. We're going to have to watch that. So we have about room for about 2% up to 2% down-ish for the Qs to finish out the week, in my opinion, from where we're at right now. And with that said, I want to transition over to, there we go. Smoothest transition ever, Dr. Stock. All right, there we go. So here's the GDP numbers. For Q4 2022, we're at 2.7%. That's an annualized number from 0.7% on a quarterly basis. And you can see that's down from 3.2% in Q3. Again, that's on an annualized basis. The quarterly basis is only 0.8%. They actually say that in their tech sheet here. You can see them saying that, and that's important because when you go to the Fed's GDP Now tool and you look at it, they actually say for the first quarter for 2023, that was last updated on March the 24th, that comes in at 3.2%, which would be 0.8% above where we finished Q4 of 2022. So that would actually be pretty significant for us. And when we look at the summary of economic projections, I can show that to you. So if Q1 really does come in that strong, that can be a good thing for us, especially if that strength is something that can hold out through the rest of 2023. However, that's not something that's expected. The word recession has been thrown around on multiple occasions. Now, they do mention down on here that it's been increased from 3.2% to 3.5%, but we won't see that change reflected until March the 31st. So we want to see when that comes out, and they're probably holding off for the PCE, and I'll get to that in just a moment. Right now, I want to show the summary of economic projections, and you can see right here's the range of what the voting members of the Fed have said for their summary of economic projections. And just in case you can't read that, as a matter of fact, let me zoom in a little bit more. There we go. Now it should be a little bit more readable on your screen. Right here it is. There's the range from -0.2 to 1.3. So stronger. They actually shifted it up by 0.3% from what they said in December to what they said in March. So that is good because it's showing stronger GDP numbers that we have. However, the trouble with a strong Q1 that they're projecting right now with the Fed Now tool is that if we come in at this median value of 0.4, we still have to contract economically to come into that value. And if we end up coming in below that, closer to this -0.2 value, we still have to contract at least one of the quarters, if not all 3 of the quarters of 2023 in order to get there. And to peak out at 1.3% from the year ago quarter is below trend growth that we would see. It would be much smaller. I have the spreadsheet available over at my Patreon. If you guys want to check that out, that is one of my Patreon exclusives that you can go over and you can check out. And I also have a video where I go over all the details of that. It's going to make this video too long. I'm not going to put it in here for right now. Now, the other catalyst that I mentioned was personal income and outlays. And let me zoom in a little bit. So the very top line of this, personal income, we get an updated number for this. It came in at 0.6%. From the preceding month. And this, what we're looking at right now, is January's data, and we get February's data. Like I said, that's on March the 31st. That's this Friday, which follows what we get from GDP the day before. So we have GDP and then we have PCE, and then we want to take a look at the Fed's GDP Now tool to see how it changes based on the numbers that we get here. So personal income, watching that increase could be a good thing to keep GDP rolling. Looking at the amount of a person's disposable income could also be a very good thing to watch to see that continues to increase. And then we also want to look at, it's not listed here on the table, but we definitely want to look at personal savings rate to see if people are continuing to save more cash, because if they're holding on to their cash rather than spending their cash, then we could have economic slowdown. If they're continuing to spend the cash and the savings rates remain low, that could be something that says that the consumers are continuing to consume. Now, the other things that we want to look at are the PCE indices that we have down here on the monthly basis, 0.6% is what they came in at. We want lower numbers there if the market is going to continue to rally. We don't want to keep on seeing these high numbers like we have here. And honestly, they're probably going to sustain pretty close to those levels for February. Although I think that's soon going to start telling a much different story, that we're going to go back to inflation continuing to moderate over the next several months. And then we have here from 1 month, 1 year ago. These numbers also coming in substantially higher than what they have. And if we go back to the SEP, we can see by the end of 2023 that the Fed right now is expecting inflation to come down to 3.3 and 3.6%. And right now we're still missing that. So this right here annualizes out to 7.2. Not great. And you can see on a year-over-year basis that we're coming in already below those values. So we'll see what the Fed has to do with this. Let's do one other thing, and let's go to the CME FedWatch tool to see what they're pricing in. And right now, they're still pricing in, the most likely case being priced in right now is a pause for the May meeting. So we'll see if that happens. And there's a 40% chance, so still a pretty significant chance that we get that 25 basis point hike coming for us. And especially as banking concerns ease, I think it's only more likely that we get that number now. That is putting the economic reports aside to say that. So the better economic reports that we get, CPI, PCE, PPI, also jobs data, if that softens a little bit for us, that can be a good case for less of a rate hike. So we're going to have to watch those happen as well. All right, I'm going to wrap up this video because I know that it's getting a little bit long. So for the markets, I still do believe that from GDP to PCE, we're not going to get great news, and it's going to push the market down by Friday. So we'll see if we go back down, we test some supports in the SPY and in the Qs as I had talked about. And I believe the SPY 1.5% down-ish, and I believe for the Qs I said about 2% down. So and that was from where they closed today. So we'll see if that really does take place. We'll see if support holds, and really then our eyes turn forward to April, which April brings with it its Q1 earnings. And that's really going to be the time where I think we're going to see a lot more volatility return to the markets. So we'll have to wait and see. Are those earnings going to come out strong? Was Q1 that strong of a quarter? What's it going to be? The banks are some of the first to report. The big banks that come out, they come out, I think, second half of April. We want to watch that. JP Morgan is one of the first. Wells Fargo's in there. Bank of America. So those are all things that I'm keeping my eyes on for right now. So in the nearer term, GDP on Thursday, I think, is going to be a big catalyst for us. 8:30 a.m. on Thursday, and then 8:30 a.m. on Friday is the personal income and outlays, which includes the PCE. Those are going to be two big things for us. And then one other thing, I'll give you a bonus for sticking around the video this long, is consumer sentiment on Friday at 10 a.m. We want to see if that has dropped off further, how have inflation expectations changes, any changes to long run inflation. Those are all things that we have on our minds coming up for near-term catalysts to close out the week. So after that, when we get closer to Friday, we'll reevaluate on Friday, and that'll be my Friday's video that I put out for you guys. Thank you for watching this video. If you want to hear more of my commentary, get that link down in the description for the Patreon. Click it, sign up, get access to my Patreon exclusive content, be a member of my Discord community, chat with me and my other community members, and then also don't forget about those shares available through Moomoo. Those free shares. That offer does expire March the 31st, which is this Friday. So you need to click sign up and make your deposit all by March the 31st to get access to up to 17 free shares. Take the opportunity. You'll thank yourself for doing it, and I thank you for all the support that you show, whether it's that link, whether it's Patreon, whether maybe it's just watching the video all the way through. If you like what I have to say, click that like button. If you want to subscribe to my channel, go ahead and hit the subscribe button. And if you want to see anytime that my videos come out, make sure that you ring that notification bell. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.